Hey everyone, welcome back to Corporate Decoder, the place where we decode the secret language of corporate filings. Today, Flora Growth Corp is serving up a fresh 8K that looks like it could be the start of something interesting. So, what is the big news? Flora Growth is making a move to bring in some serious cash, up to $50 million. They've inked a deal, a share purchase agreement with White Lion Capital LLC. This isn't just a casual handshake though, this is a commitment for them to buy Flora Growth stock. And if you're looking for insights into how companies manage their finances and make big decisions, make sure you're subscribed. We also have a fantastic Discord community where we break down these filings even further, and you can find the link in the description below. This filing is basically an announcement of a crucial new agreement. Think of it as a company waving a big flag to tell everyone it is entering into a significant deal that could change its financial landscape. The date that matters here is the 28th of November, 2025. That is when this whole arrangement officially kicked off. Now, what are they selling? It is their common shares, which are basically the regular pieces of ownership in the company. The deal is structured so that White Lion Capital is prepared to buy up to $50 million worth of these shares, but it starts with an initial commitment of $25 million. Flora Growth can decide over the next 24 months when and how much of that to sell to White Lion. This agreement gives Flora Growth the flexibility to tap into these funds as needed, depending on market conditions and what they want to do with the money. It's not a guaranteed sale of all those shares. It's more like a flexible line of credit in the form of stock. The core of this filing is item 1.01, which talks about entering into a material definitive agreement. That is just fancy lawyer talk for a really important contract. This share purchase agreement with White Lion Capital is that agreement. Here is where it gets strategic. Flora Growth holds the reins. They can tell White Lion Capital when to buy shares, up to that big $50 million ceiling, but they don't have to. It's their choice, giving them control over when they bring in this capital. Now, how do they decide on the price? There are two ways they can ask White Lion to buy. One is a regular purchase. This is tied to the average trading price over a couple of days, specifically 97% of the lowest average price during those 2 days. This helps ensure they're not selling at a significant discount to the market. Then there is a rapid purchase. This is a bit more immediate, buying shares at the lowest traded price on that day or 97% of the lowest price, 2 hours after the agreement is confirmed. This offers speed, but at a potentially slightly lower price. The actual price will depend on the specific terms and market fluctuations. So what is the money for? A significant portion is earmarked for their digital asset treasury strategy, with a specific mention of the $0 G token. This signals a clear focus on their cryptocurrency initiatives. The rest is fair game for general corporate needs. It is also important to note the possibility that no shares might be issued at all if the company decides against it. There is also a fee involved. Flora Growth will pay White Lion Capital a commitment fee. This fee isn't paid in cash, but in the company's own stock, valued at $125,000, which is 0.5% of that initial $25 million commitment. If they decide to increase the total commitment, there will be an additional fee based on that new amount. To make this all happen smoothly on the stock market, Flora Growth has to file a registration statement with the SEC. This essentially tells the public and the SEC that these shares being sold to White Lion Capital are registered and can be resolved by the investor. They have 20 business days from signing the agreement to get this done. This agreement has a lifespan. It will end if White Lion has bought all the shares up to the committed amount, or after 24 months, whichever comes first. It also has clauses for bankruptcy or insolvency, which are standard in these types of agreements. The actual details of this deal are laid out in 2 key documents attached to this filing. Exhibit 10.1 is the share purchase agreement itself, and Exhibit 10.2 is the registration rights agreement, which deals with the process of registering those shares for resale. Now, looking at item 3.02, this section confirms that the shares being sold under this agreement are being offered and sold without a full registration under the Securities Act. This is generally allowed under certain exemptions like Section 4, At 2 of the Act, which is for private placements. This means they are relying on specific rules that allow companies to sell securities to sophisticated investors without going through the full public registration process. And finally, signing off on this report is Danny Vayman, Chief Financial Officer. This signature legally confirms that the company stands by the information presented in this filing. So, what is the story behind this filing? Flora Growth is essentially securing access to potentially $50 million in funding to boost its digital asset strategy, particularly its focus on the $0 G token. This type of agreement, known as a standby equity distribution, or a flexible share purchase facility, gives the company a lot of control over when and how it raises capital. From a Warren Buffett perspective, we want to see a clear strategy and how management is deploying capital. The focus on digital assets and a specific token shows a directional bet. The question is, how strong is that bet and what's the underlying health of the core business supporting this? They're essentially using their stock as a currency to fund future growth, which can be a smart move if the company's prospects are as bright as they believe. However, it also comes with dilution risk for existing shareholders if the stock price isn't performing well when these shares are issued. A notable risk here is the uncertainty around the digital asset market itself and the value of the $0 G token. If that market takes a downturn, the strategy could face significant headwinds. On the flip side, if their digital asset ventures prove successful, this funding could significantly accelerate their growth. The key will be watching how effectively they deploy this capital and whether the company can execute on its digital asset vision. This agreement is a clear signal of their strategic direction and their need for capital to pursue it. It is a bold move, and the success will hinge on the execution and the underlying performance of Flora Growth's core operations and its new digital asset ventures. Alright, that is our breakdown of Flora Growth Corp. Its latest filing. What is your take on this strategic funding move and its focus on digital assets? Do you think this is a smart play for the company's future, or does it carry too much risk? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button. It really helps us out. And most importantly, subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord link in the description for more community insights. Thanks for watching. See you next time.